When you first start trading futures, you will have to get comfortable with the features of the exchange. But on most exchanges, they're very limited and they're only allowing you to enter everything manually, making sure that you have to stay close to your computer if your entry orders fail and you need to set up your take profit orders and stop loss orders. Using a tool like Altrady can really increase your profitability by making sure that you can spend less time setting up your trades and also make sure that you can trade while you're not sitting behind your computer, and that your positions are protected using automatic take profit orders and stop loss orders. In this video I will show you why it's easier to use a trading platform like Altrady over the simplified features that the exchanges have to offer. So normally when you go to the exchange, you would have to type in the price manually. And then you have to specify how much you want to spend. And then you can place your order. Typing it in manually is error prone and takes a lot longer. The way to set up an order in Altrady is much faster to do and also less error prone because you get visual feedback. All you have to do is specify the amount you want to buy, drag the price down and press confirm. And now your order is placed. You can also easily adjust the order by dragging it on the chart and confirming it again. Now with futures trading, it's very important that you act quickly because you're usually trading on smaller time frames, meaning that you would need to set up take profit orders and stop loss orders as soon as your entry order fails. These fast movements require you to stay behind your computer. But what if I can show you that there's a better way to do that by using Altrady? Setting up automatic take profit orders is crucial to improving your trading success. So here's how you can quickly set up take profit orders using Altrady. So we go over to the order and we click it to edit. Then we can add take profit orders and we can drag them to the correct levels. And to maximize my profitability, I can also set up the trailing take profit for the last target, ensuring that the position only closes on a downward movement. Setting up a stop loss order is very straightforward as well. Scroll down to the stop loss section and enable it. Altrady provides both market and stop limit orders. A stop market order will execute immediately once your stop price is reached, and a stop limit order will actually place a limit order, ensuring that you won't sell for anything less than your limit price. Another unique feature of Altrady is the stop loss cooldown, which will delay the closing of your positions once your stop price is reached, ensuring that your position won't get closed out on a fast wick and then only to see your take profit levels being reached. You can specify the amount of time, or you can choose a candle close, which will close the position once the 5-minute candle is closed. But that's not all. To really improve your profitability, you also have to make sure that winning positions do not turn into a losing position, especially when you use more than one take profit order. One way to do that is to use the protection function. For example, if you set it to follow price, then the stop loss will automatically move up as the price moves up as well. You also have the option to set it to break even, which will move your stop loss to break even as soon as your first take profit order is reached, ensuring that your position can never turn into a loss. An important part of risk management is to ensure that your open position carries the risk that you have planned, so you don't lose more money than you're prepared to. And this is where Altrady will help you to determine your risk-reward ratio and also specify the entry size for the risk that you're willing to take. So for example, my risk is set to account equity and I have an account equity of 225. If I want to risk 1% of my account, then I type in 1%. And you can see that when my stop loss is reached, I will actually close the position with a loss of $2.26. The risk-reward ratio for this position is calculated to 2.7, and you can verify that by looking at the expected minimum profit, which is far larger than the potential loss. When trading futures, you also need to take care of your leverage. A lot of the exchanges allow you to set up to 100x leverage. While this may seem very interesting to increase your profits massively, they can also amplify your losses and even liquidate your complete account. So while it may be tempting to use a high leverage, it's actually better to stick to the maximum amount that you want to lose. And as you have seen, that is done by adjusting the entry size. But what if you actually want to risk more than 1%? Let's say you want to risk 5%. Now Altrady will say to me that I can increase my leverage to 14%. So instead of thinking about just randomly using 100%, this is a calculated amount of leverage that I can use. So now that I've changed my leverage, I can set my risk to 5% and still only lose $11, and my profit will increase to $30. So this is the only way that you can use leverage safely to make sure that you don't risk more than you're willing to. Now, if you've just started trading futures, you may have come across the cross margin and isolated margin. In Altrady, you can change that at the top, and isolated margin will ensure that only the margin that you've entered for this position will be at risk. Meaning, in the case you get liquidated, you only lose that amount. In case of cross margin, your total account equity will be used as collateral for the position. But that also means that if you get liquidated, you get liquidated on your complete account, and you would have to start from scratch again. So the cross margin is more for the experienced traders that have very strict risk management and they won't risk liquidating their complete account. Now let me open the position quickly to show you some other things that Altrady has to offer. So as you can see, I've just opened the position and you can see the trade arrow on the chart. This is exactly where I bought. It will also show me the average entry price, including the fees that I've paid. And there's another line, which is the break-even line, to show me exactly where I need to sell to make sure that I am profitable, including all the fees. So now that my order is filled, I can set up my sell order. But as you can see, I have more to sell than what's actually in this position. But my position size is only 0.002. So to make sure that I don't oversell and actually end up in a short position, what I have to do is enable the reduce only function. Now you see that my sell side is updated and I can only sell what is open in the position. If I click on that, I can drag my take profit order and place it on the exchange. The same can be done for the stop limit order. As you can see, both orders use the maximum amount possible to close for this position. As you have seen in this video, Altrady offers a lot more functionality and a lot more calculation aid to make sure that you can increase your strategy profitability. So if you have a profitable strategy, then I'm sure that Altrady will improve your success rate and you become more profitable in the long run. If you're not convinced about using Altrady yet, then maybe check out our Trustpilot to see what people have said about Altrady. And if you're ready to start, then make sure to use our 14-day free trial. If you want to learn more about our platform, then make sure to check all the videos from our channel and also subscribe to our channel to make sure that you get notified when there's a new video uploaded. And with that, I wish you lots and lots of profit.